Hi there, welcome to the channel. So today I want to talk about Gavin Newsom's inflation relief package. Okay, so looking at this, I live in California and we have our Governor Newsom. He's proposing this $11.5 billion for tax refunds to help address inflation. So he's talking about, among other things, giving $400 checks to every eligible registered vehicle owner, 2.7 billion for emergency rental assistance, 1.4 billion for this, money for hospitals, public transit, and a variety of other things, 11.5 billion. Whew, look at that. And then also found this article on Yahoo Finance that there's other states as well. Now they're talking here that at the federal level, it doesn't seem likely that there will be a kind of inflation relief checks or stimulus at this time, but there is still, we have California making proposals, we have Illinois proposing, 100 to dollars a person, 300. I mean, that's not too much. Idaho proposing some, Maine $850 stimulus checks, New Mexico $500 rebates, Indiana something, Georgia a little bit, New Jersey, Virginia. So there's a whole bunch of states that are proposing this. So this is an interesting and very problematic thing. This is a total misunderstanding and lack of understanding of where the inflation comes from and what the cause of the inflation is. If we look at the inflation, we can see that this chart going back to the 50s, and this is the percent change from a year ago. So this is typically your headline inflation number. So currently we're in the 8.5, 8.3% range currently. So we have very high inflation. We have inflation that we haven't really seen until way back in the 70s and 80s. And we could see that in the 70s, there was a couple of recessions. In the 80s, there was a couple of recessions as well. So, high inflation is a very problematic thing. It makes it very difficult for people to afford things, and that will also eventually affect demand. Now, where does the inflation come from? One thing to look at here is that if we take on this chart and we're going to plot here, the red line is the inflation, okay? So the red line here is the inflation. So we see you got about our 8%. And then the blue line is the M2 money supply. Now, it's very difficult. In both of these are percent change from a year ago. So the blue line, this would be, the percent change from a year ago. So you can get a measure of how the M2 money supply and how inflation is going up or down on any given period of time. Now, one of the things to note here is that, like, in this period of time, there was like an inverse relationship. Here, it's very hard to see that there's this direct relationship in terms of the year-over-year change between money supply, except for one particular case. One of the things to note that we've never seen the scale of it. So look at this. This is in percentage. So going back to August 8th, 1983, the M2 money supply during that month increased 12.46% year over year. So that was like the highest that we've seen since the 80s. Now, going up to here, you see other periods of time where we have 10%, we have maybe 11%, 9.6, a little peak over here back in 2000. It grew at over 10%. But that's all you see. Now, go to what happened now in the cerveza sickness. So now I'm going to go zoom in a little bit here to the more recent data. Look at what happened. When the cerveza sickness happened, they increased the money supply massively, year over year changes of 22%, 23, 24, 25%, massive changes in the money supply. And it's an amazing thing because you're looking at it. I mean, historically, going back to the 50s, we have never seen money supply growth at that rate, ever, going back to the 50s. Now, even now, like more recently, we're still growing at 13%. The most recent data is still about 10%. So our most recent M2 money supply is growing at some of the highest. It's come off a lot, but in spite of how much it's come off, it's still growing at some of the historically highest percentage year over year rates. So then the question is, well, where did this inflation come from? Where did this inflation come from? Well, it's directly correlated In this particular case, it's directly correlated to the increase in money supply. Very simple. You see the money supply year over year growth spikes and is still high. Okay, not growing as fast, only growing 10, 12% instead of growing 25% year over year. Okay, but this directly correlates to the red line, the increase in inflation. So there's this saying, and I don't remember who it's attributed to, but it's inflation is always a monetary event. In other words, look, the inflation is coming from the fact that they printed a bunch of money. In this particular case, as I've discussed before, this growth in M2 money supply is things like these stimulus checks. Going back to the pandemic, they sent all these stimulus checks out. They printed like $1.8 trillion and gave it to people. And they didn't give it to like banks to plug holes in balance sheet. They gave it to people that spent it. And that created very high demand at a time when there was very low supply of goods. And that contributed to supply chain issues. But that is not the root cause of the inflation. And see, there's been an evolution of the discussion of inflation. It started out that the inflation will be transitory. That was the way they first came out when these numbers started spiking. They're like, oh, it's going to go away soon. And then it didn't go away. Then it switched to, well, the inflation's lasting longer because of all these supply chain issues. And yes, there are more supply chain issues. We have these, China's locking down cities for who knows what reason, just silly, but there are supply chain issues. And is that contributing to? Yes, it's contributing to the inflation. And then we have the war in Ukraine. That's contributing as well because it's making energy prices higher, food prices higher. So that is contributing as well. But you need to understand what started this. What started this was this massive growth in the M2 money supply, which is only one measure, right? There's M0, M1, M2, M3, and we can look at the charts for all the other ones as well, and they're all going to follow each other to some certain degree. So now, how is sending stimulus checks to people? How is Gavin Newsom's plan for $11.5 billion in tax refunds going to help inflation? The answer is it's not. The problem was printing money. That was the problem. You grew the money supply too fast. You can grow the money supply. Matter of fact, in general, it should grow at some rate that would kind of match the growth of the economy, the growth of the number of people, et cetera, something like that. But when you grow it too fast, as we saw here in the cerveza sickness shutdown, you are going to get inflation. And now we're seeing that. Now, here's the problem. The problem is printing more money, which is what this is doing. Now, here, remember, this money, California claims that they have a surplus, and they may have a surplus, but I'm really skeptical on that. Now, maybe they have a surplus, but hey, are all their pensions fully funded? Probably not. Secondly, California has a boom and bust kind of thing, because think about it. They have like, Zuckerberg and, they have a lot of very rich people that when their stocks do really well, they pay huge tax bills. And we've had one hell of a boom in the stock market, right? But that's coming to an end. The stock market is almost down 20%, more depending on which index you're looking at. And we are in a bear market. We have negative GDP print. We're probably in a recession as we speak. All that means that the revenues for California are going to collapse. But so the fact that they're going to spend this $11 billion instead of putting it aside is actually just really irresponsible. But in addition, going back to the inflation, so the point was, this money is actually the money that was printed. When you look over here, this massive growth in money supply a bunch of it ended up in the market. A bunch of that made rich people money that then sold and paid taxes to California, and California thinks it has a surplus. But this is all just printed money as part of that massive growth in the money supply. That's all it is. And it's all going to evaporate. And taking that money and putting it into circulation, which this will do. This money will go out to people that are all going to spend it. All you're doing is extending the inflation. You're making the problem worse. All these updates to all these states trying to send out stimulus checks, trying to help out. How do we help inflation? What do we do about these high prices? Well, we'll give you more money, but all that does is make the prices higher. So let's do a Gedanken. That's in physics, right? This German in physics. It was what Einstein used to do, thought experiments. Let's do a thought experiment. What if we solve this problem by giving everyone, we just say, look, we give everyone $1 million. Everyone just, boom, you get $1 million. Would that solve inflation? Would that solve any problem? No, it wouldn't. It wouldn't. You know that instantly people would have all this money to spend, but they would go out there and start spending it. The price of everything would skyrocket because everyone would be like, everyone that wants a Lamborghini is going to order a Lamborghini, but there's no way they can make that many Lamborghinis. Everyone does order houses, food, all kinds of crap that no one can actually produce. And what will happen is the price of everything will just skyrocket. It's just a rapid acceleration of what's already been happening with the increased money supply. So it doesn't work. All these stimulus, I hope that I hope this doesn't become a persistent thing that is done across many states. And I hope that we don't start doing stimulus again at the federal level, because if we do it, it just makes the problem worse. Now, you could say, hey, you're crazy. You know, the people, Gavin Newsom and his team and all these people running the government, they know better than you. Well, they don't know better than the Fed. In particular, right now, the Fed is cranking rates. The Fed is gone and they are cranking rates at 50 bips last time, 50 basis points at 0.5%. They're going to expect it to raise by 0.5 for the next 2 to 3 meetings. Why are they doing that? They know. And when you listen to the talk of the Fed officials, what do they know? What are they actually saying? They're saying that we understand that we need to bring down demand to get rid of the inflation. So they are doing the opposite, and they are being countermanded by things like Newsom's 11.5 billion and these other states doing their stimulus. This is actually hurting the Fed's position and making it worse. And it's making it a position where the Fed might actually have to raise rates even more. If the government is coming out and giving people more money, that doesn't solve the problem. It just persists. It causes the inflation to persist and persist and persist. So I know that this is a situation where things are painful, but the reality is everyone needs to, tighten their belt, cut back on their spending, get their finances in order. And it's very hard and it's very painful, but it's good overall for the economy. It cuts back on the demand, gets pricing back into some reasonable order, and gets us through this. This kind of stuff is terrible and it's really bad. And I will say one other thing. If you go back and you look at, there's videos out there, especially on YouTube, about the inflation of the 70s. And there was, it was called, like, they referred to it as cost push inflation. And, there was interviews in there where people are like, they're interviewing the head of like the UAW, the auto workers, and the auto workers, like, it's just signed a contract where they got like a 12% raise this year, 13% the next year, 14% the year after that. And, the head of the union was like, had pushed for these raises, and he's doing the right thing for his people from the perspective that, yeah, he's trying to get them raises because there was very high inflation in those days. We had very high inflation, 8, 9, 10%. He's trying to get ahead of it, right? He's trying to get ahead of it. But the problem is he can't get ahead of it. And all that kind of thing does is just make the inflation persist longer. So that's it for this one. Talk to you later. Bye.